Yo, what's up, guys? What's going on? Good afternoon. Well, Bitcoin making a move. A lot of bullishness out there today. A lot of bullishness, guys. If we look across, though, what has Bitcoin done? We found a little bit of support here around 86,287. We bounced back. We're meeting some resistance right in this range, 92.2. Can we break above and fill the CME gap at 96? Well, we would have to break above the 30-day moving average right here to do that at this point. So we'll see what happens. But volume is kind of starting to die off a little bit here, as I've noticed, guys. If we go down to the lower time frames, let's go to the 4-hour. I mean, volume's there, but it's kind of starting to taper a little bit, right? See? Kind of coming down now in the volume on the lower time frames. So very possible we'll come back down a little bit here later tonight. Maybe we'll find support right around here, around 90,300 area, right? Wouldn't surprise me at all. So yeah, that's what I'm kind of watching. But here's the thing, guys. I would put a note of caution out there. And I told you guys that this was going to happen. I talked about it yesterday, as a matter of fact, right? Yesterday on the Patreon Live, we talked about it. Listen, okay, we're seeing a rally, which is fantastic. Okay, we are seeing that, and that's great, right? But let's go over to TradingView. Let's go over to TradingView here, right? Now, what do we have here, guys? We're trying to break above this trend line again, which is great as well. But as you can see, and as I told you guys, we were likely going to rally all the way back up to around 110.5K, right? Possibly reject off, putting in that right shoulder, and then we're going to come down to the 200-week moving average. That's still the direction I'm leaning in. But I warned you guys yesterday that the second we started to see the slightest bit of green in the markets, you were going to start to see all over X and all over YouTube people saying new all-time highs, bull market's back on, it's not a bear market, blah, 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 right? And sure enough, look at how much green we've seen. Just that little, this little tiny bit of green. And I was on X today, and all I saw everywhere was people calling for new all-time highs and that there was not going to be a bear market and all that kind of stuff, right? Guys, don't fall for that stuff, right? We need to break above. For me to invalidate a head and shoulders pattern, we got to break above, like, listen, I know I said before, like 110.5K. We need to start closing daily candles. But for me, to be honest with you, to really invalidate a head and shoulders pattern, we have to start closing weekly candles. We can start with daily candles, but weekly candles above $115,500 to invalidate a head and shoulders pattern, right? Otherwise, if we can come all the way up to 110K, 110.5K, that's just putting in a right shoulder on the head and shoulders pattern on the weekly time frame. That's all that's doing, right? Don't get fooled by people on X telling you that, you know, that's it, we're going to new all-time highs. You have to invalidate this head and shoulders pattern or else it's going down, right? So don't fall for short-term noise is all I'm trying to tell you. Be cautiously optimistic, okay? Cautiously optimistic. Now, I laid out my plans for what I'm doing yesterday, and my plans from yesterday have not changed at all, right? This is just playing out exactly as I said that it would as we start to slowly work our way up towards the right shoulder, right? So for now, we'll see what happens, right? We also have the 50-week moving average sitting at 102,332. Who knows? Maybe we can reclaim that, hold it as support, and keep going. Like I showed you guys before, when COVID happened back here, look, we dropped below it we dropped below the 50-week for what? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 9 weeks, 2.5, almost 2 months and a week, right? Almost 2.5 weeks. We dropped below the 50-week, bounced back above it, and then went parabolic, right? So yes, that's possible. That's why I say be cautiously optimistic, right? Don't assume one way or the other. It's very important that you pay attention to what's going on in the markets every single day, okay? Because what things look like today might not be what they look like 3, 4, 5, 6 weeks from now, okay? Do not, and I repeat this, do not try to simply set it and forget it. You will lose if you do that, right? Not financial advice. Ben with the super chat-tastic. Absolutely, brother. Jake the Snake says, Rob, don't start talking logic. We want to be bull-tarded. Let's get bull-tarded in here. Absolutely, brother. Absolutely. Let's get into the chat a little bit here. What's going on out there? Ben, my guy. What's up, Rob? We going to pop the top and bounce that bottom? Let's do it. Chetaville, here we come. Crypto Future Patreon for life. Absolutely. Alfredo, what's going on, my guy? Good to see you, Quentin. Hey, Rob, not sure if you saw my DMs. I have 28 DMs to go through this morning, guys, so you're going to have to be a little patient with me for sure. Your renewal failed on December 1st because my bank locked my card on November 29th, and now Patreon has my membership stuck. I'm still listed on the tier, but all of your posts, so that basically means they're waiting to confirm your payment, right? You're going to have to contact support for that and your bank. There's nothing that I can do, brother. What happened to Zebex Supply? I don't know. I'm still looking into that. There's a lot of speculation about it, but good afternoon, by the way. Absolutely. Just wanted to let you know in case other members are experiencing similar issues. Didn't want to leave the Patreon. If there's anything you can do on your end, helps. Unfortunately, there's nothing that I can do. Like I said, you're going to have to go through your bank and to get your card unlocked and Patreon support. William, my guy, what's happening, man? Good to see you. Paul, good to see you, man. Ray says, let's get this money. Smash the like button. Hell yeah. What do we got, guys? What do we got? We have 181 people watching. We have 48 likes. Not bad, guys. Not bad. But we can get to 100. Let's reach that elusive 100 like mark. William, I think it's time for the house hippos. It's been a while. You want to see the house hippos? Well, I suppose we could drop a little house hippos on the community. Maybe get the house hippo pump going. Let's get it going here, man. Let's get the house hippos going. We need some positive vibes. We need some house hippo vibes, baby.
It's nighttime in a kitchen just like yours. All is quiet. Or is it? The North American house hippo is found throughout Canada and the eastern United States. House hippos are very timid creatures and are rarely seen, but they will defend their territory if provoked. They come out at night to search for food, water, and materials for their nests. The favorite foods of the house hippo are chips, raisins, and the crumbs from peanut butter on toast. They build their nests in bedroom closets, using lost mittens, dryer lint, and bits of string. The nests have to be very soft and warm. House hippos sleep about 16 hours a day.
That looked really real, but you knew it couldn't be true, didn't you?
House hippo pump in full effect, baby. In full effect. Guys, make sure you hit the like and subscribe on the way in. Like I said, it does help the channel grow. It costs you absolutely nothing, so don't be that guy, right? You know me, says hit the like and subscribe as well on your way in. It's the right thing to do. Let's go. Jake the Snake says markets move pretty fast. If you don't stop and look around once in a while, you could miss it. Boom shakalaka. Let's keep it going. Surf Armory. What's up, Rob and Patreon fam? Smash a like and protect Rob's grip. Subscribe to Not Financially Advised and join the trading tier. Yes, absolutely. I will be dropping 4 more trades today over in our trading group, so get over to the Patreon, guys. You're not going to want to miss it. We've been absolutely crushing it with our trades lately, man. Just smashing it. Yes, I did see that you DM'd me. Like I said, I got 28 DMs over there right now that I have to get through, so bear with me for sure. It's me, Mario. Senor Rob, happy Tuesday, brother. Oh boy, Trump knows how to layeth the smacketh downeth. Exactly. Living and keep learning. There you go. Good morning, Rob. So do you think we will be a slight rally to the CME gap? Yes, I kind of talked about that. Alts will run with Bitcoin on a relief rally for sure. But don't get fooled into thinking that, things are going to start to go to new all-time highs and stuff like that, guys. Our muscle. What's up, man? Good to see you, brother. What about that M2 chart? Haven't looked at the M2 in a while. Let's have a look at the M2. We got to add the M2 indicator. M2 money supply global index. Let's add it in there. What do we have? Yeah, look at that. She's trying to turn up again. She's trying to turn up again. Not too bad. Not too bad. Boom. You love it. Good old M2, baby. Good old M2. What do you predict altcoin season will hit? What do you see Swiftcoin Pith reaching? I'm not going to give a prediction on when I think altcoin season will hit, because every single time I do and people ask, I give my opinion, and then if I'm wrong, people freak out and say that I'm an idiot. So I'm not doing that, right? Happy Tuesday. Absolutely, Jamestown. What's going on? Let's go from wrecked to Nice. Another local. Thank you, Rob. Appreciate your work. Pay attention, fam. Absolutely. What do we got? Although crypto, Cross Country says, although crypto gains has been sketchy rep. He made some valid points in his latest video about the RSI reaching a golden zone indicator. Buy zone thoughts. Who? Sketchy rep? I don't know who that is. But I'll tell you what I'll do for you. I will watch his video today, and I'll let you know what I think later tonight on the live stream. Quentin, I've already contacted my bank and Patreon support. My card works for other Patreons, but not yours. So now I need to wait for support. Yeah, I don't know what's going on with that. Strawberry Dragon in the house. Carl, what's happening, man? Good to see you. Candyman, my guy, there he is. It's officially December, which means it's only a few weeks to go till dads are just as surprised as the kids. Yes, absolutely, brother. I could not relate to that more if I tried. Absolutely. Tony says, I'm on the Patreon. Where's the trading group? Is it the new tab? The trading group is the one-on-one tiered. So you have to be on that tier level, and all of the trade videos and the trade chat open up to you. So which tier level are you on your membership? With all the bullish news that came out today with Bank of America and Vanguard opening up crypto to their clients, plus everything happening with the Fed early this year, no way we don't close over 115K. Hey, I'll take it. I'll take it. Perseverance, hell yeah. Mama knows, child. Mama knows. That's right. OG Boban, LOL. Okay, what's your opinion? What could be that could be wrong? I told you, not doing it, brother. I'm not doing it. Tick Ditto. Hello, Rob. Question. I've been wondering if you are spot trading a token or currently holding, i.e. ZBEC, wouldn't you need to hold what are you trading in different wallets because of FIFO? Trying to understand your question. If I'm spot trading a token that I'm currently holding, i.e. ZBEC, well, I mean, first off, I don't swing trade long-term bags. So ZBEC is one of my long-term bags. So I don't generally swing trade it. I might create a separate bag and leverage trade it when I see something in our trading group or something. But if I was spot swing trading it, though, hypothetically, wouldn't you need to hold what you're trading in a different wallet because of people? Not necessarily. Not necessarily. Wow, we're caught up in the chat just like that. Well, let's dive into the news, guys. Let's see what's going on in the crypto space. Let's load it up here. What do we got from? Let's check out what's going on X first. Benjamin Cowan says Bitcoin to find the bottom around December. Oh, this is Colin Talks Crypto. Sorry, not Benjamin Cowan. Benjamin Cowan said it over here. Colin Talks Crypto says Bitcoin to find its bottom around December 17th. Benjamin Cowan says in July of 2024, the Fed rate cuts while the Bank of Japan raised rates, leading to the unwind of the carry trade. Bitcoin capitulated into it and found a low 1 week later. So if we follow suit, we should find a local bottom in about 2 weeks on Bitcoin. If things follow suit, according to Benjamin Cowan and Colin Talks Crypto. Very, very, I get the hiccups. Very, very interesting stuff. Okay, what else is going on out there? All right. Bank of America joins Wall Street crypto embrace with 1 to 4% portfolio allocation guidance. Bank of America is directing its wealth management clients to consider cryptocurrency allocations for the first time, ending restrictions that prevented more than 15,000 advisors from recommending digital assets and completing a sweeping institutional embrace that now spans Wall Street's largest firms. The nation's second largest bank told clients they should allocate between 1 to 4% of portfolios to cryptocurrency through regulated investment vehicles, marking the financial major holdout among traditional financial institutions to formalize crypto guidance. The shift grants access to clients across Merrill, Bank of America Private Bank, and Merrill Edge platforms, with coverage beginning January 5th for 4 Bitcoin exchange traded funds. The development comes as every major Wall Street wealth manager has now established formal allocation frameworks for digital assets, transforming what was once considered a speculative outlier into a standard portfolio component backed by trillions in institutional capital. And you're still sitting there wondering if you're making a good investment. Bank of America Chief Investment Office will provide research covered on 4 Bitcoin ETFs starting January 5th. The Bitwise Bitcoin ETF, Fidelity Wise Origin Bitcoin Fund, Grayscale's Mini Trust, and BlackRock's iShare Bitcoin Trust. The bank's networks over 15,000 wealth advisors can now proactively recommend cryptocurrency investments rather than waiting for clients to specifically request access. Quote, for investors with strong interest in innovation and comfort with elevated volatility, the modest allocation of 1 to 4% in digital assets could be appropriate, said Chris Heise, Chief Investment Officer of Bank of America's Private Bank. Our guidance emphasizes regulated vehicles, thoughtful allocation, and clear understanding of both the opportunities and risks. The policy reverses Bank of America's previous stance, which restricted crypto products to clients who explicitly requested them. Nancy Fahmy, head of the bank's investment solution group, said the update reflects growing client demand for digital asset access. Many wealth clients had turned to platforms outside of the Bank of America to gain exposure to Bitcoin ETFs over the past year. The bank joins a unified Wall Street position on cryptocurrency allocation. Morgan Stanley Global Investment Committee suggested 2 to 4% of portfolio could be allocated to crypto in early October, characterizing it as a speculative but increasingly popular asset class that many investors will seek to explore. BlackRock recommended a 1 to 2% Bitcoin allocation at the beginning of 2025, while Fidelity's investment suggests 2 to 5% in March of 2024, with allocations up to 7.5% for investors aged 30 and below. Even Vanguard, which previously blocked Bitcoin products, entirely reversed course this week and began allowing select crypto ETFs and mutual funds on its platform, opening access for more than 50 million brokerage customers managing over $11 trillion. Absolutely massive. So you're sitting there and you're saying, well, Rob, why does this matter? Let's look and see why it matters. The institutional endorsement of cryptocurrency allocations represents a fundamental shift in how traditional finance views digital assets. Less than 2 years ago, after spot Bitcoin ETFs launched in January of 2024, every major Wall Street wealth manager has established formal frameworks recommending modest crypto exposure, a transformation that brings regulated investment vehicles into millions of clients who previously lacked structured access. Bank of America's decision carries particular weight given the bank's conservative reputation and massive distribution network. With nearly $2.9 trillion in assets under management and thousands of advisors now empowered to recommend crypto products, the policy change opens institutional-grade Bitcoin exposure to a client base that had been effectively shut out of the market. The unified guidance from the competing institutions, ranging from 1% to 7.5%, depending on the risk tolerance and age, established the parameters that treat crypto as a legitimate asset class, requiring thoughtful allocation rather than prohibition. The recommendations emphasize regulated ETF wrappers over direct token ownership, providing custody safeguards and tax reporting that align with traditional investment practices. However, the timing presents challenges. Bitcoin has declined roughly 1/3 from its October high above $126,000 to around $85,000, now back up to $92,000 at the time I'm shooting this video. So this is big for the future. And I constantly say, guys, you should have an 8-year mindset, not a 8-month mindset when it comes to building wealth in crypto. I understand that not everyone is a spring chicken, right? Some people want to retire sooner. If you rush it, if you try to force things, you could end up wrecking yourself. Don't play yourself, pay yourself. Let's get into what Tom Lee had to say yesterday over on Squawk Box.
Joining us now is Tom Lee, head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. He's a calm person that doesn't get too excited or worried. But this is not a portentous start for December, given what you were thinking. Although I remember last time you were on, Tom, you said good year-end action, but rocky in the near term. That was about 2 weeks ago, and we've certainly seen that. But you still bullish on crypto and stocks going into year-end?
I am. I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy. So I think people got cautious, but now have to performance chase. And then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
Yep. So it's still all about the Fed, because I was thinking there is a time when a market can hit an inflection point where the reason the Fed is cutting becomes a problem for the market. That's what I thought. With the jobs and everything else, there might come a time where purely Fed cuts, or the backdrop is that there is some weakness in the market, in the economy. You don't see that?
I mean, I'd say that the shutdown put a blackout on data, and I think that created a bit of anxiety because, you know, markets like visibility. But to me, the fact that claims have been behaving and that the September jobs report kind of showed a bit of a recovery. I think the labor market's probably holding fine, but the Fed doesn't want that to worsen. But I think the inflation story is actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So, I mean, I think it's cutting for the right reason, which is, you know, real rates are tightening if they don't cut.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates? Are these the business models that are driving and powering the market right now? That's the one thing that made me sit up and say, that's a little different.
Yeah, I think there was a bit of soul searching, Becky, in November, because we know leverage rose, and we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy. And I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
I thought it was when we saw Bitcoin sell off and sort of the high flyer sell-off on the notion that Powell got hawkish at that one, whatever it was, that one meeting. And then Williams totally turned that around, and the Fed futures jumped, and it became clear they're definitely cutting again, and we got very little for that. With Bitcoin should be back at 100, if it really is totally dependent on Fed easing, and if it's the debasement trade, which people say it is. We didn't get much for now. Everybody, you're sure that they're going to cut now. There was a time where we thought they weren't going to cut. What do we get for going back to cutting mode?
Yeah, I mean, Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October, and then kind of got hit again when, you're right, when the odds of a Fed cut dropped, Bitcoin fell. And then now that the odds have recovered of a cut, they haven't quite recovered. I mean, I think that that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks. So we're kind of emerging from that. That's 7 weeks in the rearview mirror. So maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
Yeah, wipeout's a bad word. If you could pick another one next time. You had very aggressive targets for the S&P and Bitcoin by the end of the year. I mean, it'd be crazy to hit the Bitcoin target, for example. I don't know what that was. But 7,000 on the S&P is still something you think that can happen this year?
Yeah, I mean, 7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think a 7,200, 7,300 is likely for S&P.
Ask you not to do that. You're giving me a target and a time. Don't, it's not good for your career. Don't do that. You're going to be wrong one of these times, but you don't care, do you? You've been right enough.
Well, I'm just looking at probabilities, but you're right. We've been wrong plenty of times, Joe, so I'm okay being wrong too.
Okay. I never have been, really. I don't think so. That would be a big shocker. It happens to all of us. How about Bitcoin? Would you think you'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah, in fact, I think it was looking good, like you said, over the weekend, and then we got a decline, sorry. Maybe because the Bank of Japan looks hawkish. Yeah. But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right, we were too optimistic about this happening by December, but I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Tom, is there a point though, Joe and I were talking about this in the last block, is there a point where a Fed that's too dovish scares the markets because they're worried about inflation?
Yes, the markets don't want the Fed to lose credibility, and and the bond market will kind of protest if the Fed is too dovish. But I think when I look at Fed fund futures, especially implied inflation, the bond market's more dovish than the Fed. So it looks like the Fed is behind, and that's why I think cuts are necessary.
Everybody's been bearish. Tom Lee walks in the room and just flops it out on the table. That guy just 0 F's given. Oh, man, Tom Lee's hilarious. Yes. The animal spirits. I like that, Tom Lee. Absolutely. Lions Den, Rob, even though I don't have a Sierra, you're still the man. Hey, that Sierra's coming, brother. That Sierra's coming. Bitcoin and altcoins experience rapid recovery. Charts turn green. Here's the latest liquidation data and everything you need to know. Bitcoin and altcoins do not continue to rise. They could not continue the rise they experienced last week and experienced sharp declines in the new week. While Bitcoin fell to $83,000, the largest altcoin, Ethereum, also fell to $2,800. However, Bitcoin rose above 90,000 again during the day. According to CoinMarketCap data, BTC rose 2.4% in the last hour and 5.8% in the last 24 hours. 90,790. It's actually $92,088 now, driven by strong buying wave. Bitcoin is approaching 91,000. It's actually over that now. Its biggest daily gain since May of 2025. It's as leveraged short liquidations surge data shows. So we're starting to see those short positions get liquidated, and I have the hiccups. Ethereum also benefited from a recovery. ETH is trading at $2,970, up 6%. It's actually back up over 3,000 again. Solana is up 8.6%, while XRP and BNB are up 5.9%, 5.6% respectively. XRP fell just below $2 and then rose above $2 again, with a rise it experienced today. Volatility in global markets has led to massive liquidations in derivatives positions. A total of 448 million in positions were liquidated in the last 24 hours. According to CoinGlass data, $168.3 million worth of long positions and $280.3 million worth of short positions were liquidated. In the last hour alone, approximately $140 million worth of short positions were liquidated, compared to approximately $3 million worth of long positions. On an individual basis, 212 million worth of short positions were liquidated in Bitcoin, followed by Ethereum, Solana, and Zcash. The Crypto Fear and Greed Index continued its course in the extreme fear zone, falling to 23 today. It was 24 yesterday and 20 last week. Very, very interesting, guys. Don't be fooled. Don't be fooled. What else do we have? My mouse is going a little crazy here. All right. Bitcoin reclaims $90,000. Here's why. Traders are turning bullish again. The move follows a volatile 48 hours where the cryptocurrency fell towards the mid $87,000 zone before buyers stepped in with force, triggering a surge of more than 3% and pushing Bitcoin into the psychological $90,000 territory. Sorry, my mouse is going a little crazy. I gotta fix it. There we go. The global market cap for digital assets has also firmed up to nearly 1.8 trillion, supported by a rise in risk appetite across the sector. Trading volume remains high at more than $74.5 billion over the past 24 hours, suggesting the market participants are re-entering positions rather than waiting on the sidelines. Over $181.8 million in Bitcoin positions were flushed out, according to data from CoinGlass, most of which were shorts, $147.52 million compared to $34.3 million in long positions. After weeks of continuous selling, the shorts reset provided bulls with enough fuel to regain control of price action. Very nice. Bulls are in control. Technical indicators also support a bounce. On the 4-hour chart, the RSI has moved back towards 57, reclaiming the neutral to bullish zone, while the MACD histogram has begun shifting upward, signaling a reduction in bearish momentum for the first time since late November. A fresh catalyst also emerged as U.S. markets. Bitcoin saw an immediate 6% jump at the opening bell following the decision to lift the earlier Vanguard ban on Bitcoin ETFs. Trading enthusiasm was evident, with more than 1 billion in IBIT volume recorded in the first 30 minutes. Analysts say the inflow suggests that even typically conservative retail institutional investors are beginning to allocate a spot Bitcoin to spot Bitcoin products now that access barriers have been removed. According to well-known trader Michael Vandepop, Bitcoin may be acting as a trigger point for broader market rotation. He argues that a convincing break above $90,000 could pave the way for altcoin-led phase. rather than Bitcoin continue. Yeah, but you know what? Michael Vanderpop has been calling for an altcoin season for like a year and a half now. So in his view, assets like Arbitrum are showing early signs of bullish divergence, suggesting that many altcoins could soon outperform Bitcoin, but only if Bitcoin holds above the crucial 90K resistance level. So what happens next? The outlook now hinges on whether Bitcoin can establish $90,000 as support rather than a temporary rally peak. If Bitcoin defends this price zone during the next retest, traders expect a renewed push towards the next major resistance cluster between $92,000 and $95,000. As you know, we've been rejecting off $92,000 all morning. So can we break above? Well, first things first, let's close the day above $90,000 first. That would be the goal. That would be the target. Let's go back over to Squawk Box and see what's happening today on the morning market opened.
Stephanie Link Hightower, a chief investment strategist. I don't think you've ever, have you ever owned Bitcoin for yourself or for anyone, Stephanie? Because I think even if you don't, and even if you have to have some type of opinion on it at this point, with whether it's a tail wagging the dog or whatever it is, it's an indication of something, and there are some correlations between crypto and equities.
Yeah, so hi, Joe. I own Coinbase because I've said for a long time that I am interested in Bitcoin and in crypto. It is a diversification asset for sure. I don't have an understanding, though, of the day-to-day pricing of what Bitcoin is going to do. I don't think anybody does. And so the reason I own Coinbase is because all I know is the exchanges, we don't really care so much as what the price is going to be, but we want buyers and sellers. We want the volume there. And so I think Coinbase is a long-term winner. I don't think you can pay attention to the day-to-day activity of Bitcoin. I don't think enough people own Bitcoin or crypto. And as a result, you do have these very volatile swings. But I do, again, I think it is something to diversify. I have a very small position, and that's really what I would recommend for people, and to hold it for the long term. But it is definitely a risk-on asset, Joe. And it trades, believe it or not, there's a very high correlation between Bitcoin and crypto and unprofitable tech. And unprofitable tech, we know in the last several weeks has actually seen a correction that's down about 13% from the highs. And so you've seen some volatility here. We've had some technical issues as well, lower volume than usual. And then, of course, the Japanese bond market and the yields going higher, was also a sign of risk off. So you just have like these momentum swings every once in a while. But I think there are opportunities for the long term.
Well, whether it's correlated or not, it's been in coincidence is not causation, but AI and that trade and whether there's a bubble, and as you called them, I don't know, is unprofitable tech a code word for a lot of AI? I don't know. It kind of, what's the word I'm looking for? Yeah. So then we're one step removed with Bitcoin. Let's go to AI and whether there is trouble in that sector of the market, for continuing issues.
Well, yeah, I mean, look, I think there are going to be winners and losers in AI. I don't want to own the unprofitable companies in AI. And that's actually one of the reasons why I don't think you are seeing a bubble, because the big players, the big technology companies are profitable. And they are making money, and they are seeing earnings growth, and they are seeing revenue growth, and even margin expansion. And some of them are monetizing it right now. We're in the very early stages of monetization. But there are others that are not profitable that I don't even want to touch, because you don't need to when you have these other high quality companies that are doing so well. Now, it's not just technology. You and I have talked about this for about 2 years. It's also the industrial companies that are helping to build out the data centers for AI. It's also the utility companies that are helping to build out and put more money into the grid, because, just as well as I do that we haven't put money into the grid in 50 years, incremental money. And so you need to build that out. And so they're going to be winners. And then, of course, the power companies, independent power companies, they too will be winners. So I think you want to be really selective in AI. I do not think it's a bubble, but I do think you want to focus again on the companies that are making money and monetizing. Those are going to be the winners.
It's a period for the overall market that in the past, the Santa Claus rally is
that's all you got to do.
Not supposed to start in
buy the successful company stock. Why didn't I think of that?
The week of Christmas is when it actually starts. But then we got the January, first trading days of January, as go the first week, so goes the year. I mean, it is an important seasonal period that we're coming up to. And what do you think of the sentiment right now? Is it setting us up for further advances, or is it negative in a good way or negative in a bad way? Too many people bullish, or where are we?
No. I think, look, we were supposed to have volatility in September and October. Those are the crummy months of the year, the two worst months of the year, by the way. And we had two of the best months that we've seen in over 50 years in those months. So we're kind of looking at now in November, we're seeing the volatility now. Okay, so fine. So a little surprising, but now into December, as we are in December now, I mean, I think you want to definitely be adding to positions, especially on days like yesterday, and when you have a little bit more, cautiousness out there, because I come back to the economy, and the economy is doing really well. And you guys have done an amazing job at talking about the consumer and all the spending that they're doing, and Black Friday up 9%, Cyber Monday up 4.5%. The consumer's doing their thing, and that's really important. They're spending. And then interestingly, we get the H8 data from the Federal Reserve. It's loan growth, right? And so they actually came out yesterday, and we've had the 6th consecutive week of loan growth from the banks. We haven't seen that since the second quarter of 2022, which is really important. So the banks are doing their part in terms of lending out. You've got this AI bonanza happening, and then you have global central bankers also being very conservative in terms of monetary policy in a good way. And so you add it all up, the economy's doing well, earnings are okay, and you have seasonally, maybe we get the Santa Claus rally at the last part of December, but you're going to get it, I believe, very much.
Santa rally. I'm seeing a lot of people pointing out the correlations between 2022 and 2025. So very, very interesting. Yeah, so she's basically talking about NVIDIA. Yeah, essentially. Yeah. What do we have, guys? We have 260 people watching. We have 85 likes. We need 15 more likes, guys. Let's get it up to 100. Smash the like button for me. XRP ETF wins 11 trillion interest. Here's the latest. Regulation shapes every major shift in global finance. It can unlock new opportunities or slow innovation for years. XRP now stands at a crucial moment where policy choices may determine how far the asset can advance in institutional markets. The discussion intensifies after a post from Ammonix, citing Bloomberg, announced that Vanguard will allow clients to access crypto ETFs starting today. The magnitude of Vanguard's decision, backed by roughly $11 trillion in assets under management, underscores a major structural shift for crypto access. Vanguard has long resisted crypto exposure. As of early 2024, it declined to list a spot Bitcoin ETF even after their US launch. The stance delivered a clear message. Crypto was too volatile and speculative for the firm's conservative portfolios. That retrace ends now. Starting December 2nd, 2025, Vanguard's brokerage clients can trade third-party ETFs and mutual funds and hold regulated cryptocurrencies, including XRP, Bitcoin, Ethereum, and Solana. The firm still will not issue its own crypto ETF, though. Vanguard serves over 50 million brokerage clients worldwide. Those clients collectively oversee over $11 trillion in assets Even a small shift of that capital towards ETFs could unleash substantial inflows into XRP products. This move also normalizes crypto exposure for retail and long-term investors who previously avoided unregulated exchanges. It lowered friction, simplifies access, and brings regulated crypto to mainstream portfolios alongside traditional assets like stocks, bonds, and gold. At first, expect higher trading volumes for XRP-linked ETFs as Vanguard clients begin placing orders. Market makers and custodians must absorb new demand swiftly. Spread the ETF premiums may widen temporarily. This doesn't guarantee a rally. Crypto markets remain volatile, and Vanguard reiterated it would continue excluding high-risk products like meme coins, indicating ongoing caution. So we're not going to see a fart coin ETF listing, I suppose. Also, demand may remain muted if Vanguard's traditional investor base remains skeptical of crypto's risk policy profile. Many of these clients favor conservative index-based investing rather than speculative assets. Vanguard's pivot may influence other legacy asset managers to still hesitating on crypto exposure. Once again, what was once fringe, begins shifting towards mainstream acceptance. This could trigger more institutions to offer crypto ETFs, creating a broader and more competitive fund ecosystem. For XRP, widespread access through traditional brokerages removes a key barrier to mainstream adoption. As more retirement funds, wealth managers, and retail investors gain regulated access, the potential for deeper liquidity and wider distribution grows. Vanguard's decision is more than symbolic. It represents a breakdown of one of the last major institutional barriers to regulated crypto access. For XRP, the test begins now. Vanguard has also its own token. The VWA runs on Solana network. Not surprised. Fridge. I was pissed because I was going to move a couple hundred K into ETFs, and nope, not allowed. Yeah, that is a little bit of a piss off. That is a little bit of a frustration. For sure. All right, let's go look at Bitcoin again, guys. What do you got? What do you say? What do you know? So sitting at 91.7, we're struggling with resistance right in this area here, guys. Right in this area here. On that 92.4, right? Not surprising, not surprising. Can we rise above? That's the question. But we'll stay on top of it, guys. Listen, I got some coaching calls I got to get to over on the Patreon. We do have a live stream at 6 p.m. on the Patreon tonight as well. I'm dropping 4 new trades for our trading group over there. Guys, it is 50% off right now. This is our annual deal. It is only once a year. This is not like other YouTube channels that say that it's the end of the month it's over and then the next month it's the exact same deal again. This is only once a year. So take advantage of it. Lock it in, guys. Get aboard. 50% off. The link is in the chat. It's in the pinned comments. It's in the description. Make sure you use the promo code to get your 50% off. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.